Today in the crypto space, we see the market taking a bit of a dip. Bitcoin down approximately 2.5%, give or take. Ethereum hovering around that $3,800 mark. The rest of the crypto space also falling just a bit. We have WIF coming down, Uniswap, Stacks, Rune, just to name a few. In today's video, I want to talk about the general market. I want to use Bitcoin as a leading indicator, but more importantly, I want to talk about one project, one super bullish project that is ready for an upgrade, and that project is called ALEPHIUM. So you know what? Let's talk about the news. Let's analyze the charts and let's strategize to capitalize. Welcome to the channel. My name is Mike, and let's get right into it, guys. If you're new to the channel, welcome. On the channel, we talk about cryptocurrency, Bitcoin, Ethereum, and all the altcoins, looking for opportunities. Whether we go up or down, bearish or bullish, it doesn't matter. All we want to do is stay one step ahead of the market so that we can capitalize on any of the volatility. And if you appreciate the strategy, subscribe to the channel, click the bell so you don't miss out on any of my future videos, including the live streams at 7:30 Eastern, where we talk about crypto news and price action. Guys, if you have any projects you want me to cover here on the channel, feel free to let me know in the comment section below. You can hit me up on the socials. The links are in the description. Better yet, guys, join the Discord. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. The best part is it's absolutely free. All right, guys, let's begin. We'll take a look at the general market. But before I do that, guys, today's an important one. Today's a special one. This video is sponsored by ALEPHIUM, guys. ALEPHIUM right now is getting prepared for a major upgrade, and I'm here to give you a quick update on what it's all about and why it's super bullish for ALEPHIUM and why maybe you might be interested in getting in. Let's begin by looking at the general market. We'll take a look at ALEPHIUM. We'll talk about the upgrade, and then we'll take a look at the ALEPHIUM chart to see if we should be scaling in at the current moment, because ALEPHIUM at this level could be at a good buy opportunity. Generally speaking, today we do see a little bit of red. We do see Bitcoin coming down back to the bottom of the range. We've been talking about Bitcoin in its short-term range, its long-term range, basically its medium-term range. It's ranging in a very nice level. And we'll talk about Bitcoin for sure. And then ultimately, we see Ethereum pulling back, but holding up very, very nicely right here at this bottom level. So do we expect Bitcoin to continue going range bound? Do we expect Ethereum maybe to get another pop to the upside and potentially break out and get into price discovery? All of this is very possible, especially if the thesis of an altcoin season is here. We could see this altcoin season, and of course, we could see a lot of the altcoins run, and ALEPHIUM could definitely be one of them. This is why we need to be paying attention, not only to the bullish upgrades that are happening on these projects, but in addition to see what's going on in the general market. So let's continue. We do see a lot of dips. We see Dogecoin coming down, Cardano's coming down. We see a lot of retracements, a lot of pullbacks, Polkadot, and you can see a lot of them are slowly dipping. Near Protocol, very strong project. Uniswap as well, coming down 6%, and you can see a lot of red throughout the market. A lot of red, a lot of retracements, and what we have to do is come up with our thesis. Now, when do we hit this bottom, this short-term, support levels that we could definitely see a nice bounce to see some sort of bullish reaction? Because of course, with every bearish day, there's obviously a bullish day and vice versa. And after a couple of days of red, of negativity, we eventually want to see a bit of a bounce here for the bulls. We have H-bar coming down. We have a lot of Arbitrum coming down, retracements, Cosmos, a lot of retracements. So this is the agenda, guys. We have to be looking for those bottom dwellers. We got to look for those projects that are good, healthy risk to reward ratio opportunities. And of course, tonight we will definitely be talking about those opportunities, finding great setups. So feel free to join. We have BitTensor Tau also rolling over and coming down. However, it does look like it may have found a short-term bottom. Whenever I see the price go sideways, it starts to keep me interested. Look at Monero going against the grain, making a higher high and a higher low, trending to the upside. However, it's only up 1%. No big deal. Up 3% for the last 7 days. Still pretty good, no doubt, while the market is rolling over. VeChain. We have Floki coming down, but kind of going sideways right now. Lido is doing good. Lido DAO is doing great. A nice bounce to the upside, up 8%. But generally speaking, guys, we can almost conclude here that the market is in a very retractive type of position. We have a lot of decentralized exchange tokens doing very well in the last little while. And you know what my theory here is as we see these tokens from exchanges run up, it's a little bit of an indication that we got the retail market getting in. Why? Because they want to hold these tokens. And of course, we know the utility. The most of the times it's all about, getting rewards like airdrops, and even better, fees get reduced and so on. So maybe we are seeing an inflow of the retail market getting in on these exchanges, and a big get is definitely one of them. Algorand going sideways. What else? We have Beam ran up and is in a retracement all of a sudden. Quick up and down type of price action, and back to the retracements, retracements to the downside. So yes, we're going to be watching out for these opportunities, guys. Of course, leading into the weekend, things could get a bit volatile. Just keep in mind that the order books get very, very thin throughout the weekend, which means that we could get some volatility. The retail market comes in. We see a lot of volatility, so be careful out there. Obviously take advantage of all opportunities. If we get into a very, very, retractive type of scenario where you can buy dips on the cheap, guys, take advantage of those red days because they come and they go. All right, guys, let's begin. Let's begin taking a look at Bitcoin. I know you're here to talk about charts, so let's get right into it. Bitcoin is definitely going sideways. It's not doing the greatest in the sense in the short term, but it is doing great as far as daily structure. We can see a lot of structure being held up as support, and the question is, do we eventually break out bullish out of this scenario? Let's take a look at this in a little bit more detail. Honestly, we found a nice bottom right into here. This inverse head and shoulders worked out absolutely perfectly. We did get that liquidity grab. We bounced up and we got some support once again as a backtest confirmation low, higher low, and then we got that run up. Now all of a sudden I'm looking at this range. At this range right now, we do see a bit of a flag happening. Could be a bull flag or even a handle for this nice rounded bottom cup and handle scenario. Ultimately, both patterns, whichever way you want to look at it, should be gearing up for a bullish expansion to the upside and exiting this big picture bull flag. It's still a bull flag, guys. I still have to be bullish until invalidated, and my invalidation is at about 61,500, give or take. Okay, so that's what I'm going to be looking at. If we do fall below, I have to exit this bullish stance that I'm in and start considering that we could come down maybe about 45, maybe 52. These are all targets of mine that I'm going to keep an eye on. But ultimately, as we continue in this level, you guys know that I was getting super bullish at about 60,000, 500, 60,000, 61,000, and then all of a sudden now I have this yellow arrow, which means that I'm going to be a little bit hesitant here. I'm going to be aware. I'm not getting into fresh longs. No way. I'm not getting into fresh longs because right now this is a breakout trade type of scenario. We could come out, get rejected, and come back down and maybe test range lows once again. I'm not willing to get into a scenario where the risk to reward ratio is not in my favor. So currently Bitcoin is definitely gearing up for continuation if we do break out of the previous highs, but I'm not willing to get into any trade setups at the current moment. A lot of good indications here that we got volatility fully reset. As you can see, the orange line is already oversold. The expansion is still moving to the upside, which looks pretty good. And the momentum, I'm expecting the momentum to get overbought over time. So little by little, slow and steady, we have to show a lot of patience here because things don't happen. The price action doesn't happen in one green candle. We get those ebb and flows, those peaks and valleys along the way. We just have to know how to play the market. So that's that for Bitcoin. And the trend, it has gotten an EMA. We see the MACD coming down with that EMA cross, red little histogram bar, and the expansion does look a little bit weak. So I could see that if we do keep on pushing down with regards to trend, we could come down to lower levels, or at best, guys, we neutralize the negativity and we go sideways and we continue holding this horizontal support at about 67,300, give or take. I'm hoping that we close daily candles above it. We go sideways in this range, and as we go sideways within this range, altcoin season, Bitcoin going sideways, altcoins getting all the attention and potentially seeing that Bitcoin dominance fall. Guys, join me live tonight at 7:30. We'll take a look at Bitcoin, Ethereum, and the Bitcoin dominance to see exactly what is happening in this market because we need to stay one step ahead. All right, guys, I know you're here to talk about charts, but also you're here to talk about ALEPHIUM. But before we look at the ALEPHIUM chart and we talk about the ALEPHIUM chart, guys, let's talk about this update. This update obviously is something that we're all looking forward to. If you're into the ALEPHIUM project, into the ALEPHIUM ecosystem, you're questioning what is going on here with ALEPHIUM, and of course something really bullish is about to happen. We're seeing an upgrade. And what does this upgrade entail? Programmable gasless transactions. So the difference, the scenario here is that the address, the contract itself has the option to pay for the gas fees, which with the new function called pay for gas, right? In the new virtual machine instruction, basically the contract can be programmed in order to pay some of the gas fee all of it or half of it or whatever amount that is actually programmed in the contract. So in that case, if the actual individual, right, the sender or the user of the contract doesn't have the gas ready to pay for it, the contract can actually step in and pay for the gas, which is quite interesting, right? Gasless scenario, and that is being paid out of the contract. So not bad. So addressing basically enabling a smart contract to pay for the gas fee for any address trying to interact with it. Guys, that's really bullish. That's really, really interesting, creating less barriers, less friction for interactions with the network. Guys, this is it. This is it. This is where it's at. I kind of appreciate that significantly. Let's move on to the next one. We got a 90% reduction of the storage rent, which basically means that, there's a bit of a correlation here that we got to discuss, right? So new contract deployment will be cheaper from $1 of ALPH to 0.1 ALPH, 0.1 ALPH, which means that it's a severe reduction. There's a correlation with the number of smart contracts that can be deployed on the network and the cost. So you can see that the cost is coming down, which means that there's going to be a correlation with the amount of contracts that are deployed on the network or that can be deployed on the network. The larger the cost, the more expensive it is, the less amount of smart contracts that can be deployed on the network. So that means it gets full a lot quicker because it's costly. Now, if we can reduce the cost, that basically means that there's more contracts to be deployed that can be basically deployed on the network. That is super important. Of course, we want to be able to deploy lots of contracts. And in this case, the incentive is to destruct out of use contracts, and it's still there. It's still evident to basically the incentive to destruct out of use contract is still there, which is important. Cost for each deployment remains reasonable, and already deployed contracts are not affected. So this is a really interesting thing. 90% reduction of the storage rent. Let's move on to the next one. What else do we got here? Devs, they will be able to build easier with more powerful tools. Let's talk about a little bit of programming things here for a second. Mapping simplifies storing and accessing data. For those developers out there, you might be able to piece this together a little bit better, but I'm just going to kind of give you a sneak peek or a bit of an understanding of what this means. Essentially, you're able to produce, let's call it a table, something that represents a spreadsheet, right? When you have a data with its key value paired with key values. And in this case, it has a search function. So you're able to basically program the contract with a hash map, which is something that is utilized across many computer languages. Many languages have this implementation. ALEPHIUM, with its own language, which is called Ralph, is now going to implement this capability, which is mapping, simplifying storing and accessing data, while also encouraging developers and users to keep the chain clean. And how is that going to be implemented? How is it that it's encouraging developers? Well, in order to deploy this map, right, this mapping, basically a subcontract needs to be deployed. So ALEPHIUM uses subcontracts to implement the mapping feature to prevent large blockchain state. And what did that mean? That means in order to keep the costs low for deploying this subcontract, the coders themselves have to keep the code optimized nice and clean and light, so this way the contract deployment is not expensive. So it's almost like you're doing two things here at once, right? You're improving the actual language itself by introducing mapping, but at the same time, reducing the friction or the providing incentive to optimize the code at the same time. Guys, powerful stuff here for Ralph and the ALEPHIUM ecosystem. Good stuff. Now, obviously, another one that is super, super important. A lot of us talk about this when we talk about blockchain technology, reducing the block time from 64 seconds to 16 seconds. Reducing block time. Guys, this is important, of course. We want speedy, fast transactions and enabling short block times without overloading the network nodes, shortening confirmation times without increasing TPS. Tokenomics and issuance will not change. So we're getting faster, we're getting quicker, and that's exactly what we need here for a blockchain. If we keep on going, there are other notable upgrades. Sequential transactions. Okay, transactions with the same block now support sequential execution. Great stuff. So inner groups, chains for better use experience, multiple inheritance. So for those of you that are into code and understand organization and reusability and perhaps object-oriented programming, this modular type of approach will definitely improve the programming aspect of things. Increased limits, transaction gas limit and contract bytecode size limit have been increased for greater flexibility. So there's a lot more, guys, here. Obviously right now they're in testnet, but they did release a date for the Roan upgrade, and the date is June 12th at 7 a.m. GMT, guys. Be prepared. Be prepared. Now, of course, guys, I am going to be giving away $200 in ALEPHIUM, and look in the description below for those details, because I'm going to be releasing them in a few days. On Monday afternoon, I'll be giving away $200 worth of ALEPHIUM, so check the description. But as of now, guys, this is looking good for the ALEPHIUM ecosystem overall. A nice upgrade there. All right, guys, let's take a look at charts. I know you want to take a look at the ALEPHIUM chart, so let's see what's going on here with regards to price action. At the end of the day, price action, you know, it has been dipping down. It has been dipping down to some critical levels. Now, you guys know that I like volume gaps. I look at volume as a good indication of potential reaction, and we're hitting such critical levels here for ALEPHIUM. In fact, the risk to reward is absolutely healthy. I still have my green arrows right into here. You guys know that I use my green arrows to indicate where risk to reward is actually the best, and the likelihood is that we do get a bit of a reaction. Now, if you look at it, it's pretty much our previous low. So if you get into a position right here, it's not bad of a state. Why? Because you can put a stop loss real quick right underneath these wicks for a great risk to reward ratio opportunity. Now, if you look below, you do see that we have an empty gap, which means the price could fall right through, and we don't know how much lower it's going to go. So I got to be honest here. The honesty comes into play where, look, when are you going to stop yourself out? Where are you going to invalidate your bullish thesis, right? We fell through these bottoms. We made a lower low. We've been making lower lows and lower highs up until now. Now, do we get bullish divergence into this downward sloping scenario? Now, let me zoom in just a little bit more here, and we'll take a look at the momentum and trend oscillators in a moment. But I just got to be clear that this is looking like a descending type of wedge. Very, very clearly a wedge. As you can see, it's wedging out, and statistically speaking, this wedge should break out bullish. And usually just statistically, the target for a breakout out of this wedge is usually the base of the wedge, which $3.20, sure, why not, right? If we come to that level, we can see that we taper off with a lot of volume, and there's a lot of emotional individuals at this level that got in and bought the top, and they're pretty salty right now because they bought the top and they've been holding a red bag up until now. And as we get to this level, it could be that we get a bit of a reaction from those individuals selling at break even. It could happen. So what I want to keep in mind is, as we do come down, as we did come down, we start to get into a great scenario where the risk to reward ratio gets healthy. Now, this green arrow is a good DCA level, so I'm going to kind of introduce another horizontal line here just to, you know, kind of make it clear that this zone, if we break below $1.45, I guess then that's when you can kind of speculate that we could be coming down to 82 cents, previous lows type of scenario, right? Not a good look. I don't want it to happen. Statistically speaking, we should break out bullish here based on this descending wedge. Now, what else do we have here? We have a bit of resistance here that I'm expecting at $2.36 based on this little volume gap. But as you introduce all the price action, you can see that it kind of, you know, still exists, but it's kind of filled in just a little bit. So maybe we do come up, get a bit of a rejection, come back down, and continue to the upside. I'm expecting some peaks and valleys as we do break to the upside, and especially as we build some confirmations. Now, what do I mean by that? Confirmations are important, especially when you're just looking at price action. Remember, price action is king. Price action is king because as of now, we're making lower lows and lower highs. It would be epic. It would be awesome to see a higher high or a higher low into this pivot if we do end up getting a pivot point. So what I'm saying is, let's kind of see if we make a higher high above this high, okay, and that would be great, and then come down for a higher low, and that would be awesome. And then all of a sudden we get lots of confirmations. We can scale in right into here as a confirmation, a higher low, and then we start moving to the upside. Awesome stuff right there, right? What about if we don't make a higher high in one shot, and perhaps we double top, we come down, higher low, and then go for the higher high after? What does this start to look like? Inverse head and shoulder, right? We start to look at inverse head and shoulder scenarios, and that would be also very good. Basically what I'm saying is I want to see the character change. I want to see the change of character within this price action, in the structure of this price action, in order to give us an indication that this is a pivot point where we're rolling over to the upside. Now, in addition to that, What would make me super bullish is to see bullish divergence. Of course, we want to see this divergence happen in momentum and in trend. I put a lot more emphasis in momentum because ultimately momentum, I'm a momentum trader, and I do appreciate to see momentum shift. I do see that the expansion to the downside has been tapering off. We did get a bit of a spike of volume or momentum to the downside, but it does mean that maybe we continue to the upside and we eventually taper off to nothing, and then we start to see a green expansion to the upside. Ultimately, we do see the momentum kind of bottomed out a little bit here. Do we get into an absolute oversold state to get down below the 30% mark? That is still very possible. So psychologically and emotionally and economically, prepare yourself for that possibility. And the volatility definitely is coming down to oversold conditions. So we're almost there where we've hit oversold many times in the volatility. And if you backtest and look at what happens when the volatility, which is the orange line, gets oversold, most likely we start getting an indication of a bit of a bounce to the upside. So ultimately, what I'm looking for is a pivot. I want to look at the momentum to give me an indication that we're ready to start moving to the upside over time. And we are potentially there. We're potentially at a zone where we could expect this thing to start giving us some rounded bottoms, some inverse head and shoulders, cup and handles, Adam and Eve patterns, W formations with bullish divergence, and then eventually get some follow through to the upside. If you look at the trend, we got our first sign of bullish divergence. And in fact, I think we're working on another drive of bullish divergence. The EMAs would be nice to see them get into the bullish control zone, but nothing just yet. So we got to be very patient because as of now, the EMAs and even the MACDs kind of going sideways, whereas my expansions are slowly getting smaller, giving me that indication that yes, maybe the bears are showing a little bit of weakness in the next little while and the bulls can start stepping in for that pivot. So ultimately, the daily is where I would be focusing. I wouldn't be getting on lower time frames yet. I wouldn't be getting in on this on leverage. I would just be accumulating on spot and just keeping in mind that if we start breaking below $1.43, that's where things start to get hectic. That's where we got to, understand that there's very little support below and we start to look for horizontal support levels, and maybe we just have to say, you know what, let it fall, and then we'll reaccumulate at lower levels to basically improve our strategy. But at the current moment, guys, this is where it's at. I'm expecting a full recovery after we get those confirmations into this level. And remember, I try to stay one step ahead of the market here, so I'm preparing you guys with this possibility, with the ability to identify this pivot at this level. Now again, I'm just gonna make sure I put my targets in. Short-term target, like for a quick secure target, I would be looking at the top of the wedge, and I would be a little bit I would front run this, take a bit of profit, trail up a stop loss once you're in profit, because that's a viable option to get defensive on the gains. And I'm going to put this arrow on this side. Sorry guys, I grabbed the wrong line. Let me put this arrow on this side, right into here. This is a great area, and obviously where we are right now, obviously great areas right into here. And then in addition to that, I want to put a red arrow right above, because the red arrow will remind me and keep me accountable, keep the strategy accountable, that ultimately we want to prepare for a potential take profit right here, or defensive mode strategy, right? And that means, maybe take a little bit of profit, 10-20% off the top, skim off the top, trail up a stop loss so that you make sure that if it does get rejected, you walk away a profitable trader. But then again, I would always remain in a bullish stance, because really, look at all this accumulation that's happening in here, guys. I just want you to look at the end of the day, ALEPHIUM did not get a major expansion. All it's doing is accumulating. There's no major expansion. So let me zoom out and show you what I mean, big picture. What I'm really hoping for is, even if we do catch this bottom, yes, it's okay to get defensive with a bit of profit and trail up a stop loss, but what we're really looking for is a breakout out of this accumulation range. Let's just be clear about what's happening here. We got a lot of volume, we got a lot of market participation. What are these individuals preparing for? And if the thesis is that we are in a bull run, and we understand that the altcoin season should be around the corner and the bull run is going to bring us some gains, don't you think that eventually we should have a bullish thesis that we expect an expansion to the upside? And if that's the case, I'm expecting this to kind of do whatever happens, and then we start moving to the upside. Big picture, we should start getting an expansion, and then after the expansion, what we should see is another consolidation. And at this point, we should see another flag or some sort of another pattern of some sort, and then we put stop losses, and that way you can trail up your stop losses bit by bit, and you can accumulate more into this range, especially if you're on the sidelines and if you haven't got into this level. Guess what's going to happen? We're going to get a bunch of volume into here, similar to what happened here, and then this is going to be a volume gap, right? Where at the end of the day, the bulls are going to want to protect this volume gap for a continuation to the upside. Guys, if you've been following me here on the channel, you know that these volume gaps work out most often than not. Okay, so a big part of the strategy is to basically identify volume, identify weak spots in the charts and opportunity. And I do feel like from a risk to reward ratio opportunity, this is the chance, this is the time where a trader should be thinking about taking strategic calculated risk. So what does that mean? Let me get this price action recentered here and we'll look at the setup. Okay, quickly we'll look at setup, and you can see that ultimately if we get into a bullish not Fibonacci, it's this right here, the setup, if we put it right into here, let me kind of rearrange this a little bit better. And we take it to this level right here. We go and we put a stop loss. Let's give it a bit of wiggle room. Let's put it right into here. Yes, we're down approximately 16.5%, but your reward is over 100%. Your ratio is 7 to 1. Now, it could happen. It could happen that this works out absolutely perfectly, but if it doesn't, you have a stop loss to mitigate your risk. Just understand that it's going to take a bit of a hit of 16.5%. So ensure that your position size can handle a 16% dip. So if it's $100 that you're playing with, just understand that's going to be $16. It's not much, but if you're getting with a bigger position size or using leverage so that you can multiply your position size, just understand that at the end of the day, you're going to be taking more of a hit. And number two, you're going to have a liquidation point. So make sure that you have that all in check, but look at the reward. The reward is already 100%. And at that level, you can take half on the double, take your initial investment off the table. That's viable. A lot of people do that. Let the rest run for the bull run. And that way you can rotate that capital on a dip. If it does come down, you can buy back in on a retracement. And there's always pullbacks, there's always retracements, and if you consider yourself a trader, that might not be a bad strategy. But if you consider yourself a long-term holder and all you want to do accumulate is for the bull run, trail up a stop loss, guys. Just trail it up to this level. Once we get into the green, trail it up to around this level. You don't have to be aggressive about it. You can take 10% off the top if you like, just to, you know, take a bit of profit and feel good about yourself, and then let the rest run. Let the rest run, and as soon as we get into that expansion, then you can trail up the stop loss even further, protecting your gains even further. And then ultimately, guys, it's very likely that, you know, again, that bullish thesis, are we in a bull run? Are we going to make these gains? I think so. Guys, if I've offered you any value in this video, do the channel a massive favor. Slap that like button. It does really help out with the algorithm. If you want to follow me on the socials, the links are in the description below. And don't forget, guys, I'm giving away $200 worth of ALEPHIUM. Find the instructions in the comment section below. Guys, take care. Have a good one. And don't forget, buy the dip.